a check-in on how the raising scene is going during COVID. So I hope you get a lot of really good value out of the session today. As always, please feel free to jump on the chat and ask questions along the way. We'll try to tackle those as we go, and we'll have a Q&A session at the end too. So let's get started with some quick intros. So my name is Helena Patience. I'm a CPA, CMA, and the CEO of Entreflow Consulting Group. We're a consulting firm based in Vancouver, beautiful Vancouver, British Columbia, a CPA public practice firm. And I'm going to talk a little bit about our services in just a moment, but I'll pass it over to Bhavik, our other presenter today, to just do a quick intro of himself. Welcome, Bhavik. I'm so delighted to have you here today.
Thank you for having us. Pleasure to be here. So yeah, I'm Bhavik Chan, I'm VP of Business Development and Marketing for OKR Financial. We're a national firm. I'm based in Vancouver, same as Helena, and our headquarters are based in Calgary.
Brilliant. So a little bit about Entreflow for those of you who don't know. So we have three main service areas. We do all the accounting you can handle, CFO services, accounting, bookkeeping, corporate tax. Really focus on fractional CFO support for high growth companies. Really focus on making sure there's this right foundation in place from which to grow. So the people, processes, and systems are all aligned. And so we work with a lot of startups, a lot of scale ups, especially in the tech and manufacturing realm. We also have an HR practice where we do recruitment and HR management for growing companies, and as well we do a lot of software selection and implementation. So that's that process side, making sure that you've got all the software in place to automate as much as possible and run your business as smoothly as possible. So that's a little bit about us, and I'm going to pass it back over to Bhavik, and he's going to tell you a little bit more about OKR Financial.
Yep. So we're a 5-year young company. We're made up of 8 different funds for all types of investors, from your regular person who's putting their RSPs in to family offices. We currently have just over about $150 million of assets under management, and we specialize in 3 key areas as well as services. The one is we finance government-funded programs and tax credits. The second one is we provide traditional asset lending solutions and some creative ones as well. And then lastly is our venture fund, which we launched last summer. It's our 8th fund, where we're actually doing equity investments into companies and assisting them with turnarounds to grow, scale, and exit. So that's our focus.
Brilliant. Thank you for that. Our agenda for today, and also we'll have our contact details at the end of the session here today, so you can feel free to reach out if you have any more questions about what we do, and you'll probably get a bit more of a sense of that as we go through the session today. Our agenda, we're going to talk about 3 ways to raise cash aside from grow your revenue. Obviously, growing your revenue is probably my favorite, being an accountant, but there are 3 ways to help get some cash into the company aside from revenue. Next is best practices to prepare yourself for a raise. So before you go looking for cash, there's some things that you want to think about, some gotchas you might want to consider, get yourself prepared. Then some considerations for raising debt, equity, and government grants. And then finally, some things we're noticing in the market with regards to COVID. That's our agenda. This session today is part of the Entreflow Secret Weapon business chats. The link's there, and we'll have that in the chat as well for you to click on. Go check out other webinars that we have coming up in the near term. We focus generally on finance and HR related, scaling related topics, and as well OKR Financial's webinars are listed there too, so you can go take a look at their past and our past webinars there too, so you can get yourself informed with all the best tips on how to grow your business. And as I mentioned at the start of the session, please ask questions. It makes it much more exciting, and it's our collective intelligence helps to really deliver the most value here. So please feel free to ask questions as we go along the way. You can put them in the chat or the Q&A there. We'll have some people responding, and we'll try to answer them as well. And send them to all panelists and attendees as well, so that the attendees can see the questions that are being asked. We'll also have a Q&A at the end of the session, and we'll open it up if we've got some time at mics too, if people want to jump in and share. And as well as we go, if you have any other suggestions, tips, what have you, that's always great to share as well as questions. So if there's anything that comes up for you, please feel free to share that too. Okay, 3 ways to get cash aside from revenue. You need more cash than your revenue can bring. Well, there's 3 other ways that you can look at to bring some cash into business. One of them is government grants. One of them is bank loans and loans or debt and investment. And there's certainly some pros and cons to each of these. We're going to talk about these in more detail as we go today. And depending on what's happening for your business, this might be the order that you want to pursue more cash as well. I know Bhavik and I talked about this a little bit before the session, but sometimes it's easier to get those government grants going before getting some business loans and investment, especially if you're in early stages. With all of these different mechanisms, having revenue is definitely helpful. Having a proven product and a market that really wants it really helps. But there are some mechanisms out there for for some of you who are pre-revenue, there are ways to help get some funding in the door to support you there. So we're going to talk about these in more detail as we go through today. But Bhavik, do you have any other kind of high-level thoughts here on this topic?
The only thing I can say is the order it's in 1, 2, 3 is it's cheapest to most expensive, in my opinion. So that's one thing I'd probably suggest. That's why we've got it in this order.
Good point. Good point. Awesome. And some best practices. So before you go looking for cash, some things you might want to consider. Are you and your team and your business really ready to actually raise? So some questions to think about. Do you have the right team in place for the task? It can be time consuming to fill out applications, to work with lenders, to work with investors, potential investors. It is pulling you away from the operations and the development of the business. So do you have the right people in place for that task? Do you have all the structures in place? Do you have the right board in place? Do you have a board that's there to support you with what you need to do to get yourself ready, and also to have that backing of external people that are there to support and have faith in what you're doing. Do the time, energy, and the budget. There's also often costs associated with raising as well that people often forget. For instance, if you're going to investors. Banks, they're going to want to see your financials. They want to see that your books are up to date, so that your tax returns are done. You might have to get a review or an audit done. Those all cost money. And so you need to set aside for that, budget for that. And you might need to set aside some resources to be able to fulfill those things. The financials are really key. I find as an accountant, running Entreflow for almost 6 years now, a lot of businesses come to us with their books out of date. Their books haven't been done very well. They've got their mom or their friend to help them out. And I'm obviously biased because I'm an accountant, but your financials is certainly not a place to cheap out, especially if you're looking to raise. You need to make sure that you've got a proper accounting system in place. The books are being done with high quality on a regular basis and closed every month. It just makes it so much easier. I've seen a lot of companies were delayed in their raising that really put them in a tight time crunch because there was so much work that had to get done to get the books up to date. So keep making sure, even though you might just be starting out, it's good to get your accounting software in place and start getting the bookkeeping caught up and into a regular flow so that you're ready to go when you need to. And then finally, make sure you have a business plan. You need to have, it doesn't have to be a 120-page document, but having spent the time going through, looking at your competitors, that your market, your pricing strategy, your go-to-market strategy, and thinking through all the options and the possible pitfalls is really important, and documenting that so that if somebody wants to take a look at the overall plan here, they can get that level of detail. Obviously, your forecast is really important. Again, your financials need to be up to scratch there in order to build your forecast. So what is this going to look like? When are you going to be profitable? How long is that going to take? How much runway do you have? And your proof of concept. So I'm sure there's probably many, many more things to consider here. So I might pass it over to Bob to see if he has any.
Yeah, so just to add to the business plan, I just want to touch on that. It's really important for all 3 stages of financing that we're mentioning and we're going to cover today, because you've got to think of it as a blueprint, and it will make you understand whether it's a romantic dream that you have in this project that you're doing, or it's actually going to make you money, right? And how long is it actually going to take? And you'll see how it ties into government grants, and you can see how it turns into loans, because you really need that to see if someone's going to lend you money based on that. But it's really important for investment raises as well. Like, are you out for lunch? Or actually, have you thought this through? And so it's really important to do this business plan off the get-go, and then you tweak it as you go along. As your business grows and evolves every 3 months or 6 months, it's good to go back and say, are you hitting the objectives, or do you need to change your plan? So it helps you stay on track and evolve your business the way it's supposed to go. And a lot of the companies now, where we've seen in the last year and a half, have had to adjust and evolve because of the pandemic. And if they went back to the business plan, it may have been a lot more easier to to turn and change their forecast and the way they were doing things. So just
Yeah.
touching on that.
Yeah, for sure. No, good point. Good point. And then get clear on what you need is the next step. So, I know you're asked, how much cash do you need and by when? So just throwing out, oh, we need $1 million. Okay, why and for what? You have to have a rationale for it, right? So, and what are you going to do with that cash? What is that $1 million going to cover, or 50,000 or whatever it is? Oh, a couple of developers. Okay, cool. Well, let's get to the nitty gritty. What does this actually look like? So being super clear about what your ask is. And your ask might not always be cash too. It might be, especially if you're looking for investors, it might be, people who might have connections or partnerships that are beneficial to you as well. Also think about, what if you can't raise all the cash that you want? So do the scenario analysis. What if you can only get half of what you need? How are you going to sustain the company, and what's your strategy to carry on? Because it's often the times that you don't get all the cash that you need. So, having a plan A, plan B, plan C, plan D, plan E is really helpful, in case it doesn't go as planned. And we're in an interesting time during the pandemic. There's it's both more difficult and easier to raise at the moment, and so it's just a little bit more unpredictable than normal. Find sources that strategically align with what you were doing. So as far as the grants go, obviously there's grants that are probably more tailored to your type of business than others, right? So seek out those. Same with lenders. There are lenders that specify in specific types of industry. And then with investors as well, investors will typically have certain groups of companies industries that they like to work with. You want to seek out those types of investors that are going to be a good fit, so that they're not just bringing cash to the table, but bringing, advisory support or consulting or, guidance, connections, whatever it is that might be helpful. They might have some expertise in your industry that would be really helpful for what you're doing. So there's lots of things to consider from your need perspective, and it might not just be cash. Anything you'd want to add there?
No, you've covered everything there.
Awesome. Okay. And then get prepared. So build a succinct, beautiful, more visual than text-based slide deck. Okay. So have it nice and succinct, really nice to see, clearly defined, with it really describes your why, your who, your when, your how, and a clear ask. Okay. So you need to show that you've done your homework, you've got sound numbers, but they don't need to see 3 slides with every single line item in your P&L. Please don't do that to people. Only accountants like that. So, keep it clear. If they want additional information, you can have it ready for them to share. But this is really a way to showcase your brand, what you're all about, your reason, and what you're asking for, and why you're such a worthwhile entity to participate in. And then practice your pitch. Make sure that you're ready. And even if you're this, even for lenders, you might not necessarily do a pitch like you would for investors, but to have a deck is helpful to be able to give them a high level summary. If they need to get up to different levels of their team, it's a nice way for them to be able to communicate what you're doing more succinctly than, say, if they were to verbally go and communicate what you're doing on your behalf. Know your competitors and the next best viable option. There's always another option for consumers. So you're not the only, nobody's a unicorn. There's always another option. So understanding who those companies are and the pushback that you might have, it's really important so that you can come back to any questions. Like I mentioned, have your books and your taxes up to date, and you'll probably need an NTR, a notice to reader, for a lot of, especially for debt. So make sure that you've got that ready to go and queued up, and have on top of having a business plan and your financials in place, it's always really good to pass it around to other people to take a look at. There might be something that you're missing. So, pass it over to people that you trust, who have that knowledge and expertise to provide you with some guidance, just to poke holes and see if they can find anything that might have been missed.
Yeah, and just to add to that, on the pitch deck, and I run workshops on this to help a lot of people out. But the biggest thing is I'd mention is keep it simple. Don't complicate your pitch deck, because if you've got a technology and only the engineers understand or the developers understand, you might lose a lot of money out there. There's a lot of money out there which I like to say it might not be the brightest spark in the room, but if they get it and they've got the money, they'll invest. So you should dummy down your presentations, make it simple and easy to read, and don't read off the decks. It should just be bullet points to highlight, and you should know the ins and outs of what you're trying to do.
Mm.
And another two big areas of financials are obviously important, but just before the financials is I would mention the go-to-market strategy. Make sure
Mm.
it makes sense on how you're actually going to deploy this and how you're going to get your target market. Just can't be social media. And you've actually done some market validation
Yeah.
research. Say, are you actually playing in the right space or in the right country? And if you can define that, will help you go a long way, especially when you're pitching to investors and raising money. Know and understand, yeah, you're in the right area. You got a good plan to get there, and know your competitors is really important. And
Mm.
two reasons: your competitors could actually be your exit plan. They could be the guys that could buy you out, right? Also, it's a good understanding knowing your competitors to determine your price point as well. How quick can you actually get to break even and making money and paying yourselves? So knowing your competitors are really, really important. And the pitch deck is literally like a mini version of your business plan, right? It's a high level overview. So you got to highlight the talent in your team, whether it's just yourself or you actually have a team, and also highlight the board of advisors you might have. Sometimes a lot of investors will come in knowing you're being advised by a good mentor that's been involved in exits or successful scale ups, and you can attract some good money doing that way. And the ask is always there. It's got to be more than money to really make you succeed,
Mm.
whether it's advice or mentorship or connections, to going through that and think through the deal. And I would really say either talk to an accountant or a specialist about evaluating your company.
Mm-hmm.
Um, Most companies that I'd say probably 80% of companies that when they start pitching, the valuation is out for lunch.
Yeah.
And you've got to get a realistic, either they're too
Yeah.
low, but most of the time they're too high. Be realistic with your valuation. And that way investors will think, yeah, you know what, you guys are serious, you've done your homework properly, uh, and they'd be willing to invest. So I just wanted to touch that on the pitch deck side, things that
Mm.
you definitely have.
For sure. Just one thing to add on the marketing side too, you need to test your marketing too. You need to prove it out. So even if it's just a little bit of A/B testing and testing out your pricing or response rate, it could be a small campaign just to see if there's any interest is really helpful too, rather than just, oh, we're going to try this, this, and this. Okay, cool. But is that actually going to work? If social media is your main go-to for your go-to-market strategy, you need to show that it's actually going to work. Okay, and then once you've got your funding, make sure your forecast is up to date and that you manage your cash flow carefully, especially if you don't get all that you asked for. Speak to your bank. You know, there might be some ways for you to piggyback off of the trust that's been developed with others to lend you or invest in you to be able to bring some, more confidence from your bank to maybe say get a line of credit or something like that set up to assist with some wiggle room. And then people often forget to do this, but keep your lenders and investors informed on how you're doing. Let them know when you have some good milestones, some achievements, keep them up to date on what's happening, keep that relationship going. It makes it easier if you need to go back to them and ask for some more money later if they've kind of, they've been following your story. Because as you can imagine, from when you got that cash to whenever you might need to go to them again, if that needs to happen, they've probably spoken with hundreds and hundreds and hundreds of people, and the memory's lost. So keep them up to date. Anything you want to add there, Bhavik?
No, that was good.
All good?
Yeah.
Okay. So now let's get into the nitty gritty. So I'm going to pass it over to Bhavik here. He's going to talk to you about some government incentives.
Yeah, so I mean, tax credits is probably well known, especially the SHRED program. It's been around since 1984. So that program alone is about $4 billion is given back every year from the Canadian government. Probably a bit more this year. So, it's a big program. A lot of companies, especially if you're young and start saying, well, we're doing sweat equity. We don't actually have any payrolls. How do we do this? I'm going to give you some advice that the accountants probably won't give your consulting firms is there is a way around it. Yeah, cover your ears. I would say you can just make sure you pay the payroll taxes. So if you want to claim SHRED, what the government care about is you've paid your taxes. So if you can make the payroll taxes for what you want to claim, so you don't have to put the full payroll on, there is a way of sort of nurturing that system to utilize SHRED. So I would say, look into that as a startup if you haven't been doing that and you want to tap into it, because if you're not making any money or it's less than 800,000, that return is going to be in the form of cash. So it's very important that you guys can utilize that, and that could be immediately executed, and you can get that return. The quickest I've seen is 3 days, which is like really rare when I was involved in that industry. But on average, it's about 3 months that you'll see the money back from the CRA. And then there's other tools, and I can mention that how a company like OKR, you can leverage that shred tax credit to get cash through the door earlier. But the big one is the government grants that are out there. There's over 2,500 programs, federally and provincially, that's available out there. And it adds up to over $10 billion. So, there's a lot of programs out there, and I'm going to go through on another slide coming through on how you navigate that and how you maximize on those programs. And this is all non-dilutive. 90% of the programs are non-refundable, and the tax credit is an entitlement, so you're not paying it back to the government. So it's cash that you can utilize to fuel your business. Next slide, please. So government funding incentives. Next slide. So the step-to-step guide on how to navigate this. So we're going to go back to the business plan. I would probably say a mini business plan. And what that means is you want to highlight where you're going to be spending money over the next 3 to 18 months to grow your business. And let's just say you had an unlimited pot. What would you actually be doing realistically without going OTT? Would you hire a couple of developers or an engineer or a marketing team? Or do you want to be doing trade shows, or do you have to buy equipment? Once you've highlighted that, that's the best way either for a consulting firm or yourselves to navigate what programs are actually available based on what you're trying to do. So it ties in with your activities. 90% of the programs that you're going to look at are going to be dollar-to-dollar match or some sort of contribution from yourselves to qualify for a government grant. That's why understanding the spend is really important. So if your project's going to cost you $400,000 and a lot of it's R&D, you could qualify for an IRAP, and you put down the full project cost, and they might say, well, we'll only give you 150. The only way to qualify is if you have $150,000 available. So there are ways around that. So a lot of startups out there right now, when they're going for these programs, and they do find say, well, we don't have the cash flow, so they sort of pull out. This is where OKR can come in, and we can sort of, shameless plug now, is we can provide you an LOI at no cost to say we would provide you the matching contributions to get you qualified for that program. And once you're approved, what happens with these government programs is, and there is a process, right, where it could take anywhere from 3 to 16 weeks to get funded on a program, but they don't give you all the money up front. It's either monthly tranches or based on milestones. So what OKR does is we take that grant as an asset, and we will advance 65% of that up front. So then you can go and utilize the program. You have cash flow without giving away equity or IP. And the only security we'll take is the program itself or the tax credit. And that's what we do. So you do need to develop a mini business plan to understand how to navigate these programs. The other top tip is a lot of these programs are first come, first serve. So you want to make sure you have an application ready before the window opens. Not all programs available all year, but you sometimes get an indication of when they are going to open, and you get it in. The difference between government grants and tax credits is what I'm going to say is the tax credit's an entitlement. If you've spent money and doing the activities, it's your right to get that money back. Government grants, and if anyone hears from a program, apologize, but I normally mention them as they're like the mafia or the mob. If they don't like you for whatever reason, they're not going to finance you or fund you the program. So you really got to develop relationships with these program managers. And I would say 95% of them are very friendly, and they want to help you get this money. So they'll tell you exactly what needs to be done. And if you're liked, they'll repeat the funding because you're utilizing the money properly. And so you've got to build that relationship. And you'll get a verbal from most of these program managers. Yeah, we'll give you X amount of dollars. Just make sure the paperwork's in place for this date when it opens. So you're on the priority line to get funding. And there's a lot of consulting firms out there that do this, and they work on contingency. And your contingency fees will range anywhere from 10 to 30%, depending on who they are and what you negotiate with them. Next slide, please. So the 5 areas where most of the money is, and I'm just going to go through them. So there's a lot of money in research and development, R&D, variety of programs, and they're federal and provincial. And so long as you're doing something very similar to Shred, being innovative, you have a focus on commercialization, yeah, there's a variety of programs out there that you could tap into on R&D. So that's lucrative area number 1. Slide number 2. Is HR and training. So this is really key to not just R&D grants or just training grants, but probably every grant. So you've got to think of the government as an investor. They want to invest in your company to make you grow. They don't really like startups because startups have no money and they feel 8 out of 10 or 9 out of 10 fail. But as I said, there's a way we can chase the money with OKR and open up these doors. But what they want to hear is you're going to be a Canadian company, going to grow, have Canadian sales, tax dollars go back in the system. You're going to hire Canadian or permanent residents to grow your business. And that's what they're looking at. So when you paint that whole story about any program, whether it's marketing R&D, that's what they want to hear. That's your vision, and you have a higher chance of getting qualified. So there's a variety of hiring and training programs nationally and provincially available. You can get anywhere from $5,000 to $105,000 depending on the program. Most of the programs have an age restriction of 30 or under, but depending on the role, it could be for laborers in the farm that you can get funding for, or students or interns. There's a variety of programs, and then training wise, there's a federal program where in every province has a slightly different rule depending on where you are, but you get up to $10,000 for third-party training. So if you need to recruit or retain staff, it's a good incentive to have this grant that's available. Every province has different rules of turnaround times on this. In BC, it's once a month. Alberta, it's any time of the year. You can put the application in. So it does vary on the training programs. But it's very useful in part of recruiting. The hiring grants are useful in the sense that you could actually compete with other companies if you wanted to pay a higher salary, because then you've got a contribution from the grant. So let's say on the YEP program, where you can get $15,000 to $20,000 towards an R&D associate. Typical R&D associate, maybe on the junior, will go anywhere between 60 and 80,000. But if you want to be more competitive, you might want to be between the 70 and 90 by utilizing the grant. So these are the useful forms of the training grants and the hiring grants. Next slide. Commercialization, there's a variety of programs and incentives out there right now, especially for exporting. And depending on what industry, there are some other really lucrative programs for doing trade shows, events, packaging, local marketing, domestic marketing. So look out there. If you have a big spend and say, look, we want to break into United States with a big social media, or into Spain with a new website, or cover translation costs. Some of these programs will cover legal costs, boots on the ground. So it can go towards sales costs for breaking into new markets. So commercialization, there's a variety of programs for that. The fourth area where there's a lot of money is capital expenditure. This is more focused more towards the manufacturing agricultural industries, and it really comes down to where you're going to be based in provincially. Most of these programs are provincial. There's not many federal programs that are focused on this, but there are programs where capital expenditure, software is counted as capital expenditure, depending on the activity you're doing and what kind of productivity it's going to create for your facility. So there's many programs available, and you can get anywhere from $50,000 to several $1 million in capital expenditure. And the next one is the last one, is the green initiatives. This is a major mandate for 2021 for Canada nationally. Every province and every city has a budget or a focus on doing something green in there and going off there. So there's going to be a lot of money available in here, whether it's you refitting your facility with LED lighting or new HVAC systems, to actually developing technology in this space. So definitely a big initiative this year for green. So if you're focused in that area, there's a lot of money available right now for you guys. Next slide. So I've touched on SR&ED tax credits. I'm not really going to go into too much, apart from the fact that if you're doing any sort of R&D and innovation, look into it, apply. It's an entitlement and it's cash if you're not making anything more than 800,000 at the moment. Everyone's probably done so many events with SR&ED tax credits, so I'm just not going to bore everyone with that right now. Unless you have any questions based on that, I can answer them.
I like your last point here that only 5% of companies are wearing lab coats, because there is a bit of a misunderstanding sometimes that people have about SR&ED, that it has to be very scientifically focused. There's a lot of or technology focused. There's other areas that are funded via SR&ED.
No, I'll give an example out there actually, because that's a good point. So this SR stands for scientific research, which is 5%. It's the experimental development that everyone's doing. I had a client, and I won't mention their name, but they literally they developed something to separate their food clusters that we're making. So they were getting all lumpy. And the experiment was all done on a piece of stick and pieces of wood sticking out of it, and that was their prototype. and they may have got lucky, but they had this whole process. It was literally a process change. They weren't really doing anything apart from a process change. And they claimed, and they got about $140,000 back for the whole project. So it can be processes, and it doesn't have to be brand new technology, which is a big one, I would say. So as long as it's not, the knowledge isn't out in public, whether it's on the internet or a handbook on how something was developed or created, you have a high chance of actually claiming shred if you're trying to figure it out on your own. WhatsApp's a good example I can give. It's a messenger app. They haven't released their codes on how they developed it and all the features that they do. You can go out and develop your own version of WhatsApp and claim it as a shred project because you're trying to figure out the coding and everything else that it does. So it doesn't have to be brand new. So you could actually reinvent the wheel, long as there's some challenges and you're improving on the wheel, for example.
Gotcha. And if you feel like you've missed the boat, you can go back, what is it, up to 2 years to claim prior
months.
year?
Yeah. 18 months from your fiscal year
18
end.
months, right. Sorry, thank you.
That is correct. So I touched on this: new product, new process, existing product. So before you do actually think about going into shred, number one thing is do some research. Does it exist? Talk to suppliers. Is there a workaround or an existing solution? If it doesn't, then you probably have a shred project. And I would typically say, if you've had 3 kicks at the can and you're failing, and you've got an eligible shred project, you're really getting paid by the CRA to fail and advanced knowledge to say this works or this doesn't work. And it doesn't have to be a completed project. So if you've gone through last year and you've had some failed projects and you shelved them and said, that's it, I'm done, that's claimable because it didn't work. You didn't get what you needed to do. So, and I've got clients that have had shred projects been going for the last 10 years because platforms change. You have new iOSs, Apple comes out with something new, Samsung. So, you're always evolving, and so you're always claiming. Once you get on this train, you tend to be on it all the time.
When is a good time to reach out to a consultant, a shred consultant?
Anytime.
Anytime?
Anytime. Because sometimes you might not have the right things in place. So really important is documentation, that you're tracking the changes, iterations that you're doing. And if you're new to this and you've got to go back 18 months, it's a lot of work and brainstorming. Okay, what went wrong? Right? Got to capture that data, because you do a filing, but you need to have this backup paperwork of everything that's been done, because you may go into an audit, which is a high likely chance of if something's been written wrong or you're a first time claimant. And they'll come back and say, okay, what's the proof of that you actually did the work? So I'd say as soon as you think you're doing this, start talking to a shred consultant, putting this together, because you could be 6 months away from filing, or you've got 18 months of work to catch up on. So it's best to explore and find out what's available and do it straight away. Okay, asset secured lending. So government funding, that was the grants and the shred tax credits. Right? Asset secured lending is really straightforward and simple. Next slide, please. So you could do PO financing, contract financing, AR, inventory, capital expenditures, land, property, anything that's collateral can be financed. As long as there's a value to it and it holds, and you can utilize it. And typically the banks, BDC are probably your best bet to go initially, because that's cheaper money. But then there are companies that exist like OKR that they're a little bit more expensive, but can be a bit more creative because you don't fit into a traditional box. What we found currently right now with young companies and that are early stage is they land a big contract and they just can't meet it because they don't have the money to do it. And the banks and BDCs can't help them because you just don't have enough revenue. You haven't been in business for a year or 2 years. So they're stuck because they just can't bend the rules. So someone like OKR, we would take that contract as security and we will finance it. And so there's something out there that we can do. So, you look at banks and say, if you don't have any assets or any T4 employees, sometimes that's a deterrent. Say, okay, you guys aren't real, right? So we can be creative on that, on the PO financing, the contract financing. But if you do have some assets out there, look to utilize those to get non-dilutive financing to grow and make a raise versus just diving straight into equity. The next slide, please. So, for purchase order and contracts, just a bit of a shameless plug again for OKR is these are the kind of documentations we need. Most of the top section, the standard you probably already have or your accountant has. It's really easy to print off and send over. It's the additional documentation now, which is really important. So if you have a purchase order and you're working with Nordstrom, for example, you're probably going to have some paperwork in place for that agreement. That's something we just need to see to verify it's real. But the important one is if you're doing business outside of Canada and you've landed a contract, I would advise make sure you speak to EDC and you have an EDC insurance in place. This will protect you just in case something goes wrong.
Mhm.
We've got a client that's doing business in Africa or in South Africa, and this is one of our requirements before we finance that program for them. So EDC insurance not just for asset based, but even for government grants. There's government funding programs in Europe, in Australia, and Africa that can be utilized by Canadian companies. And if you get approved and you put money in, and all of a sudden the grant gets closed, you're not protected. So make sure you have EDC insurance. And number one is for your sales and purchase orders. So we would require that as part of our due diligence to go through. And the companies that you're working with have to be in business for more than 12 months. If a startup is selling to another startup, it's a bit of a red flag. It's like, how can the other startup afford to pay for this if they don't have anything in place? So, and then a pitch deck or marketing material, if it's available, we'd like to have a look at that just to see how real and where you are, and potentially could be good for an equity investment for from our company or our partners. So we don't mind looking at pitch decks if you're raising as well. That's it for the asset base, I think. Next slide. Yep. Our team. So we've got Jason, Randy, the two founders, both well-known angels and VCs. Several awards between both of them with the successes that they've done. Doug's in charge of our corporate finance, so he's the one. Him and his team do all the due diligence. They're the ones that do all the hard work in approving loans and financing. We've got Bill, our CFO, who's been with Jason for over 15 years on various different projects, from startups to large corporation turnarounds. Wes is probably a big integral part of on our investment side and our deals that we do. His background is he ran a $40 billion portfolio for many years for one of the largest banks out there. So he's a good individual to have on our team and a big asset for us. And there's myself. Know the government's grants world inside out, not just in Canada, but internationally as well. So that's a bit of my background there. These are some of our key partners that we're working with, some well-known brands, and some local ones there as well.
Awesome. Okay. Any last points on the grants here?
Oh no, my last point would probably be is before you do equity, exhaust non-dilutive as much as you can. You want to keep a control of your company as long as you can. If you're pre-revenue and you're trying to raise equity, you're probably looking at 40 to 60% of your company is going to be given away. If you're trying to get to MVP stage or you just got your MVP, you're probably looking at 20 to 40% of your company you're in giving away. But if you're at commercialization stage, I would probably say that's the best time because you have a higher valuation for your company to go and raise money if you can. So exhaust non-dilutive as much as you can.
And then do you have some top tips for how to help business owners navigate all the grants programs? I know we get a lot of questions about that because there's so many different websites. They have different, I know they've tried to consolidate a number of the programs into kind of one central place, but there's still a lot of programs out there with different requirements and long applications and what have you. So, I mean, what do you recommend to business owners if they're just starting off looking into grants? Where to start?
I would say engage with a consulting firm.
Okay.
If you don't have the bandwidth at all to write applications, because they do this every day. There are firms out there that their team, all they do is grant applications every single day. So they have to navigate it and present your projects correctly. And they're on the pulse. They know what's available for what you're doing. So that's number one. Number two, I'd say there are a few apps out there. There's a new one that's just come out recently called Pocketed. There's a funding portal and there's some other ones, but Pocketed seems to be a nice friendly one where, you can search programs and, it'll instantly spit them out based on what you're trying to do. And it tells you, if it's a matching contribution or how long, when the windows are opening. So you've also got a lot of platforms you can search. And then there's government websites. The only downside to the government websites is they don't update them regularly.
The government websites?
Yeah, they don't update them regularly enough, even though they're the ones administering and managing the programs. But they do have contact numbers where you can reach out to program managers and discuss the programs. So I would definitely say check those out as well, depending on your bandwidth, because if you're doing the work on your own, it does take a lot of time up as well. So utilize your time here. There's a question about what was the name of the app. It's called Pocketed. Yeah.
Can someone add the link in there for us? I'm not sure if Someone from Team OKR or Hannah can assist there. Okay, cool. That's great. Thank you. That's great advice. And because I know we get that question often, where to start? Is it worth the time? It is a lot of time. So having a firm to support you with that seems logical. What kind of I'm assuming they would do traditionally a contingency or something like that.
Yeah, a lot of firms do contingency fee on the grants of programs, which is really good, especially for startup homeland money.
Right.
Probably a handful of programs that don't allow success fee, but there's a way around that where you sort of have a verbal confirmation from the program manager, and then you sort of agree a fee with the consultant, say, look, how much are you going to charge me to write this up? And then you agree on that. But for majority of the companies, it's big contingency, and you're looking at anywhere from 10 to 20% on government grants as a contingency fee. To do that. The other option is if you wanted to have a quick overview on, okay, is there really anything out there for me and the best solution? You can reach out to someone at OKR, and we can give you a quick high level overview. Yep, you know what? And introduce you who we think may be the best consultant for you. The number one thing sometimes with the consulting firms is you want to be working with someone that actually understands your industry.
Yes.
And a lot of the companies have their consultants that have actually their engineers or software developers in the background. So when you're talking to them, especially when it's tax credits, you want them to be able to write and understand what you're doing without Google translating it. And because sometimes you get errors made when they don't really understand your tech and they've written in a certain way. And the CRA auditor is now an engineer as well. Their hiring's very smart. And they're like, yeah, this isn't innovative. This isn't on, it's been presented incorrectly. So sometimes it's best to talk to a consultant that will fit with someone that understands the industry. Government grants, not so much, but definitely on the tax credits, you should work with someone that understands what you're doing.
Great. Thank you for that. Okay, next we're going to talk about debt really quickly. I want to leave some time for, and thank you, the hellopocketed.io link is in the chat now there too, if you want to check that out. Thank you for that tip. I didn't know about the app, so you can go waste some time on another app later. Time well spent, right? So we're going to talk about debt and then investors really quickly here so we can leave some time for our Q&A later. So here's high level, some major options for businesses. Now, typically, they require some kind of personal guarantee. So just bear in mind that with a lot of these, with the exception of the first one, obviously, unless you want to give a personal guarantee to yourself, which would be weird. Basically you're on the hook. So if you're able to get that lender to lend to you, at the end of the day, if something happens with the business, you're still on the hook for the debt. Okay. And some business owners are okay with that risk and some are totally not. So it really depends on your risk tolerance. So the first place to look is to yourself. Do you have any savings that you can use to help fund your business? Oftentimes, lenders, investors, they're going to want to see, like, do you trust yourself in your own business? Are you putting your own money into this company aside from your time? And then as well, your friends and family. It does say something. If your friends and family are looking to support you, it does add a little bit of credibility there. And they're usually going to lend you the money at a lot lower rate or for free, which is often really helpful. The one caveat to this is, make sure that your family and friends are clear about the risk that they're jumping into. You don't want to have really awkward Christmas dinners for the next couple of years after, Uncle Bob has lent you a bunch of his retirement savings and then the company folded, right? So, just be careful about, navigating that space, but it's often the easiest, fastest, quickest way to get started there. Futurepreneur is also fairly quick as well. They have, so long as you're fairly early stage there, they do have, I think they're $40,000 loan somewhere in there. Loans that come with a mentorship program as well. So you get connected with a mentor. I'm a mentor for Futurepreneur. I've been doing that for years. And so you've got some support to help you kind of navigate through the space as well. Next, you have a private online-based lender. So I listed OKR Financial here, which is not exactly the same group as the online-based, but you've got the Lendifys, the Lending Loops, the Fund Throughs, the Clear Banks, but then as well, OKR Financial also has lending as we discussed today, and I'll let Bhavik speak to that in more detail in a moment here. If there's anything to add from what we've discussed so far. Also, the Business Development Bank of Canada, they a little bit harder to get some funding from. They really want to see that you've got a couple of years of revenue. There are some programs available that don't require revenue or maybe fewer a shorter period of revenue, often need to speak to your BDC rep there. One of the complexities with the BDC as well is they've got their central office and then they've got their local regional offices. And so depending on the amount that you're looking to get, you'll deal with either a local office or a regional office, and there's a different levels of bureaucracy in both locations. So it's kind of good to know what your options are and really dig into all the different programs. And if you're asking for a certain amount versus a certain amount, how would that look, and do you have a better chance of getting it? Because you might be disqualified for say 250, but it might be really easy to get 50,000, and maybe that 50,000 is worth it right now, at least just to get your foot in the door. Export development, we discussed this already. Once you have, I think it's about 150,000 in export revenue, I think. That's when they kind of roll out the red carpet. So they'll help you with, not a lot of travel and conferences happening right now, but for funding for marketing efforts. So conferences, traveling to go meet potential clients, customers, what have you, partnerships. They have some really good programs there. I think they have loans. They have loans as well. And as Bhavik mentioned, they've got insurance too, which I didn't know about. So that's cool, learning something new every day. Last time I spoke with them, they did say there's no harm in reaching out to them before you hit that $150,000 revenue mark. It doesn't hurt to pick up the phone and make a connection and talk to them about what you're up to, and confirm when a good time would be to follow up. There might be some new programs or some changes to the programs that might make you more eligible sooner or not. So it's worth still reaching out and getting that relationship started. For anybody who's in the food and beverage business, the Farm Credit Corp has some lending options as well to look into, and there's a number of industry specific ones out there, but I thought I'd just put that in there as an option, and to consider that there might be some specific lending facilities available in your specific industry. And then last but not least, and I put it at the bottom because they're probably the hardest to get anything out of, is your commercial bank. So your high street bank, CIBC, BMO, Scotia, yada yada, where you have your business bank account. They obviously have loans and line of credits. That you really need to have revenue, assets, and a fairly low risk business in order to get much out of them. It can be helpful while you're scaling once you've kind of proven yourself. But oftentimes I find a lot of new businesses can barely get a credit card from a bank, let alone a loan. So they're helpful more on the scaling and expanding. They want a very low risk for the most part. So really quick high level view of some options from a debt perspective. Bhavik, anything you want to add here?
No, apart from our OKR Financial, so we turn around financing within 10 business days.
Wow, that's incredible. Very, 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 very unheard of. Usually it's a long process. Okay. And then I've got some slides in here and just a couple of different options in the programs. Just in the interest of time, the slides will be available so you can look at those resources later. But just because we've got only about 8 minutes left here, let's go to the investors. So a couple of options here. Again, this is high level on some how to pursue investment, and completely agree with Bob. Do what you can to get non-dilutive funding first. So find those grants, loans, do what you can there before you start giving a piece of the pie away. And the later you can wait to get investment money, the better, if possible. Again, yourself, your family and friends are great. So if they're willing to actually take some share ownership, that's great. And if there's obviously no interest rates there. Next to private investors. So lots of different places to find them. I just threw a couple of examples on here. So there's the Angel Forum. There's one in Vancouver. I think they've got a couple of forums across the country as well. So depending on where you're located, I'd check out where they are and the types of events they're doing. I think a lot of them have had to move online because of the pandemic. Hockey Stick is also, I think we did a webinar on Hockey Stick in the summertime this year. If you want to go back to our website to find that webinar, it is a cool platform that lists different investors and investor groups, VCs. So it's a really great resource for connections, contacts, and it lists them by type of industry that they typically invest in. So it's just a good way to find a big long list. So I could list out a whole bunch of investor groups, investors here, but I think hockey stick's a pretty good resource to go find a big, long list there. OKR Financial, as Bhavik mentioned as well, have this facility there too. Crowdfunding too is also interesting things happening in the crowdfunding space. So some of the legal barriers that were making it very difficult for the crowdfunding space to really grow are starting to dissipate. So it's making it easier for individuals to go to crowdfunding sites to fund in larger amounts now, especially in the US and in Canada. So front funders is obviously one option there, and there's a number of different companies out there that do crowdfunding. But it is a way to, potentially raise money through a number of different groups of people. It's a lot of marketing involved. So just if you're going to go that route, it's obviously building a buzz, having a good marketing strategy. There's a lot of people out there doing crowdfunding now, so it's a lot of noise. So it's not an easy task. Just like there's no silver bullet in all of this, but it is a way to get as well. And risk, depending on what you're doing, there might be, and how appealing it might be to the masses, it might be an easier way to go or a more difficult way to go. If you're doing something that's really complex and unique and niche, it might not be the easiest thing to crowdfund. There's also brokers that you can access to get connections with private investors. I find there's a lot of cost involved, and you really need to know who you're working with and understand their expertise and their connections. It's typically a bit more expensive as well, but if you're looking to raise bigger amounts of cash, this can be one way to go. Venture capitalists as well, really better for scaling. They're really coming in with cash and, there to support from some of them from an operational perspective as well. And so you want to choose those people wisely because they're kind of in the business a little bit more than a typical investor, and really good for maybe scaling or expanding your business. They really need to see revenue and that you're proven. And then finally, and this is one that a lot of people forget, is really strategic partnerships with other companies. It doesn't hurt if there's, there might be businesses that are in your industry or in neighboring industries that are doing something similar, maybe vertically or horizontally from you. You might have extra cash to invest in you in order to help you to bring your product to market that's going to be beneficial, mutually beneficial for both of you. So, sometimes looking to the market to see where you might have some strategic partnerships can be helpful as well. So there's my short list there. And Bhavik, any additions there?
I just want to touch on the list a little bit. So I normally look at when we're investing in companies, if you can't sell or have your friends and families believe in you, it'll be very difficult to get investors to believe in you. So you've got to kind of try and make some traction with your friends and families and see if you can raise some money that way. Even if it's 30 grand, it's something that you're able to bring them into believing what you're trying to do. And the other one is the strategic partnership with other companies. I strongly believe in this one, especially if you've got a new product and you want to make a quicker impact on the market. You really want to try and align yourself with maybe not a competitor, but someone that already has your client base and your demographic, and it could be an additional or a complementary service or a product you're doing with them. It's easy to get to market if you can do that, and that could become your number one investor. So
for sure. And it adds street cred too, that somebody else is willing to work with you. So if you are going to raise in addition to that, then at least it's a stamp of approval. Someone else trusts you, right?
So those are probably the two big ones I'd probably say, you should go through.
Okay, we've only got a couple minutes left here. I just want to touch really quickly on considerations for COVID, and then we're going to share our contact details. Somebody was asking about the presentation. They'll be listed on probably both of our websites in our webinar section, and I think we might be emailing this out, the contact or the details out about where you can find the slide deck as well as the recordings. So hope that helps. A couple of just quick things here. There's a lot of new government programs available because of COVID. Especially for some, they're not all post-revenue. Some, so there's some there for pre-revenue companies as well. So things are changing in the government program space. Lenders more conservative than before, and this is what I'm hearing from lenders themselves, that there's specific industries. If you're in a restaurant industry, they're probably not going to lend you money right now. They are being more conservative because of we don't know how long it's last. Some industries are going the opposite direction, are actually benefiting hugely from the pandemic, so they're actually probably going to have an easier time to get debt. So it just really depends on how the cookie crumbled, whatever industry you're in. From the investor side, more willing to giving more, and rounds are closing faster. That's kind of what I've seen in the last little bit, that there's a lot of engagement. There's people seem to be more engaged in investing in growing businesses right now. Bhavik, anything you'd want to add there?
Yeah, I'll probably top on the end bit. Yeah, I've probably seen a lot more investments happening a lot quicker in the last 10 months. And the reason being is people aren't going anywhere. So they're attending all these events and they're reviewing these things, and they're actually taking time to understand these pitch decks and these projects. So if you do everything correctly and present it correctly, you've got a good chance of actually raising capital. Long as it's not just a concept and you actually have a plan to execute, you're raising right now.
Okay, we're just at time here, so I'm just going to pop over to our contact details. I'm happy to stick around for another minute or so if anybody has any burning questions, and otherwise if you need to run. Thank you so very, very much for joining us today. I'm delighted to have you here. I hope you got really good value out of the content that we shared today. Like you said, there'll be some emails going around with how to access the content again and future webinars. And on behalf of Entreflow, super delighted to present with Bhavik today. Thank you so much to OKR Financial and the whole crew there who participated to help us get this prepared. And for Bhavik, obviously, for being here to share all of your knowledge and expertise. So thank you.
Thank you for having us. Appreciate it.
Thank you, everyone. And I'll just stick around for another minute if anybody has any burning questions. And otherwise, have a lovely day.
I just wanted to reply to Barb here with her question about the presentation and just reiterate that this will be available on both of our websites. So last call for questions, and I will close it. Thanks very much, Helena and Bhavik.
Thank you.
Thank you. Have a lovely day, everyone.
Bye.